Alright, imagine this, you're juggling two businesses. One's a bustling online store selling handmade crafts. The other's a growing consulting firm. Both are your babies, your passion projects. But when it comes to keeping the books, you're staring at a mountain of paperwork, two separate subscriptions, and a feeling like you're constantly switching hats. You think to yourself, there's gotta be a better way. And then the question hits you. Can I just put both of these businesses into one QuickBooks Online account? That's the question we're tackling today. Because let's be real, many of us aren't running just one thing. We've got side hustles, multiple streams of income, or maybe we're just trying to streamline our lives. So, can you? Is it possible to consolidate your financial chaos into one neat, tidy QuickBooks Online account? The short answer, unfortunately, is a resounding not exactly. QuickBooks Online, in its standard setup, is designed for one company per subscription. You can't directly combine the financials of two separate legal entities under a single subscription. Think of it like this. Each QuickBooks Online subscription is like a dedicated filing cabinet for a specific business. You wouldn't throw files from two different clients into the same folder, would you? It'd be a mess. But before you resign yourself to double the subscriptions and double the headaches, let's explore why this limitation exists and what alternatives you have. First, the why. QuickBooks Online is built around the concept of separate legal entities. Each company file is designed to maintain distinct financial records, including balance sheets, income statements, and tax reports. This separation is crucial for accurate financial reporting and compliance. Mixing businesses within a single file would lead to a confusing, inaccurate, and potentially legally problematic mess. Imagine trying to file taxes for two separate businesses using a single set of books. You'd be scrambling to separate transactions, allocate expenses, and ultimately, risking errors and penalties. It's a recipe for an accounting nightmare. So, direct consolidation is a no-go. What are your options? Option 1. Two separate QuickBooks Online subscriptions. The most straightforward, albeit potentially more expensive, option is to maintain two separate QuickBooks Online subscriptions. This ensures clear separation of your business finances and simplifies reporting and tax filing. While this might seem like a financial burden, consider the benefits. Clear separation. Each business has its own dedicated financial space, preventing confusion and errors. Accurate reporting. You can generate accurate financial reports for each business, allowing for better decision-making. Simplified tax filing. Tax preparation becomes significantly easier when your financials are properly separated. User management. You can easily manage user access for each business independently. However, it does mean you're paying for two subscriptions, and you'll need to switch between accounts, which may be a bit of a time sink. Option 2. QuickBooks Online Advanced with company consolidation. If you're dealing with multiple entities and need a more robust solution, QuickBooks Online Advanced offers a feature called company consolidation. This allows you to generate consolidated reports across multiple company files. However, it's important to note that this feature doesn't combine the data into a single file. Instead, it pulls data from multiple files to create consolidated reports. This allows you to see the overall financial picture of your combined businesses without merging the underlying data. This is a more powerful tool but comes with a higher subscription cost, which might be overkill if you are running two relatively small companies. Option 3. Using classes or locations with limitations. For those determined to stick with a single QuickBooks Online subscription, you might consider using classes or locations to track the finances of your different businesses. However, this approach comes with significant limitations and is generally not recommended for separate legal entities. Classes. Classes allow you to categorize transactions within a single company file. You could create classes for each business and assign transactions accordingly. However, this doesn't provide the same level of separation as separate subscriptions. You'll still be dealing with a single balance sheet and income statement, making it difficult to generate accurate reports for each business independently. Locations. Similar to classes, locations allow you to track transactions based on physical locations or business segments. However, this feature is also not designed for managing separate legal entities. Using classes or locations can be helpful for internal tracking and analysis, but it's not a substitute for separate subscriptions when dealing with distinct legal entities. Furthermore, it could make tax filing a nightmare. Option 4. Third-party consolidation tools. There are third-party tools and apps that can help you consolidate financial data from multiple QuickBooks Online accounts. These tools often provide more advanced reporting and analysis features than QuickBooks Online's built-in consolidation capabilities. However, it's crucial to thoroughly research and vet any third-party tool before using it. Ensure it's compatible with QuickBooks Online and that it meets your specific needs and security requirements. Option 5. Separate QuickBooks Online accounts and manual consolidation. While it's not the most efficient method, you could maintain separate QuickBooks Online subscriptions and manually consolidate your financial data using spreadsheets or other reporting tools. This approach requires significant manual effort and is prone to errors. However, it might be a viable option for those on a tight budget. With that said, thanks for watching, and until next time.